Hey, it's Michael Saul with the Stock Market Trading Watch List for Friday, December 16th, 2011, the last triple witching of 2011. So today I'm going to start off with RIM, which just got moitered after hours. You can see here trading $13.98 was the closing price that TradeStation gave it for after hours. I believe they stop at 8 o'clock. But anyway, this one looks like, unless there's some news pre-market in the form of upgrades, and it's the greatest deal ever, looks like it's going to be gapping down. So there's definitely some opportunity there for the nimble day traders. And, you know, with gaps, I don't like just jumping right in at the open. But, you know, using some technical analysis, whether it's Fibonacci grids or... well, it would be below the moving averages, so that's not going to matter if it gaps down here. But Fibonacci grids or other support and resistance levels could definitely be one to watch. Now, you have to go back a while, all right, to find out, to find where these levels were previously. So 1398. Let's see, it'd be down here. You got support down here in the fives. I don't know if you want to wait that long. Let's see, run a fib grid here. Alright, you got $1.43 here. No, that's not. It's not going to be one. Alright, let's see what the. Yeah, no, it's below these. Below all of these on the weekly. Let's see what else we can do. We did that one. We did that one. Guess we could do this one. It's below the 78.6. Yeah, so this is interesting. So I don't see any retracements. Let's grab a horizontal line. Okay, we're below that one. Yeah, no, this is a little ugly here, to say the least. So I don't want to turn this into a RIM video, but I guess I could watch for momentum to slow up on a gap down, or I don't know, depending on what gap entries you use. Doesn't necessarily have to hit support. I just always like to lean against something. But anyway, so it looks like RIM is going to be gapping down, like I said, unless things change. Let's look at the S&P 500. Okay, so we had an up day, but it was barely one. We gapped up. Once again, this chart doesn't really reflect it well because it's the S&P Cash Index. But basically, we gapped up, and then we double topped intraday right into the 10 o'clock Philly Fed number, and then that was it. We sold off, and then we chopped from about 11 o'clock on into the close and went down, tested the lows again, but we never quite filled the gap. Well, we technically gapped today. We opened above Wednesday's high, so we did fill the gap. We didn't fill the lap, which means we didn't trade to Wednesday's close. All right, so, you know, right here, we are oversold. I've been watching for a bounce, a Christmas rally, a Santa Claus rally, holiday rally, to be politically correct, an end-of-year move. And so far, it has not come to fruition. And the gap up on Thursday, I was not looking for that as the trigger. Now, could we get a snapback rally that starts a bounce? Sure. But since there wasn't any real overwhelming good news, which in my opinion is what I think would start something like that, you know, a big oversold snapback rally. But from here, I think we're going to stretch a little bit further here. We're below the moving averages. I think the bottom pickers are getting knocked around here. So I think we're going to stretch a little further. I'm going to watch this trend line, even though right now it's not valid because it only has 2 points. But I think if we do come down to that, maybe even break it a little and remount it. Obviously, like I've always say, I watch it in the intraday charts for the patterns to set up. But I'm going to watch us to get stretched a little more here and see if we can get a bounce. Could we get a bounce before then? Absolutely. But to me, market just looks heavy here. And why I say that is that the upside just keeps getting stuffed. The volume pulls in on even a small up day. It was more of a pause day, I guess. But I mean, I did not like the fact that the highs were put in basically in the first half hour. And then we just couldn't even get close the rest of the day. Not that it was a wide day, but still not looking nice. All right? So I think we're going to go down a little bit here. I still hold to the model that we do not wash out and that we come in and wind up holding some form of support, whether it be the trend line or Fibonacci level, something like that. And then we try to get a bounce. And I don't know how far that bounce is going to go. I read somebody today, a technician today, who is targeting the mid-1300s on the S&P, which would be something special, I think. But for me, I'll just take a bounce into the relative highs. Here's the Russell. Did okay today, up 1%. That's not bad, but still a long way to go here for it to get bullish. Here's the SOX. Not nice. It didn't close down much, but look at the candle. Opened up, traded a little higher, and then just, sold it off. Okay, the banks, brokers. All right, there's a Goldman. And I'm really looking too sharp here. Just looking heavy. Below the moving averages, volume above the 50-day average. Could be in for a retest of the lows here. Look at a quick look at Bank of America. And also looking heavy. Doesn't want to trade lower into the fives. Healthcare at the 200-day. See what that does. Can get a bounce there or not. Cyclicals. Yeah. Once again, just not looking so sharp. I mean, yeah, we could definitely do this in the market, right? From here, just go higher. But I don't know. Seems like we may want to go lower first. All right. GLD. Yeah. Under the 200-day now for 2 days. And could be looking to get this 143.77 target. SLV. Not looking so sharp. Oil. Not using the USO. Below the 200-day for 2 days also. Support down here. 34.65, I believe that is. Let's see what that is. 34.54. Okay, sorry. 34.54. Gold stock to watch. AUY. If gold is stretched here and oversold, AUY is holding the 200-day for now. Okay, watch this one, I think, at the beginning of the week. But gold went opposite. There was no trigger on this one, but you can see here we have 1334 as the last line in the sand before a retest of lows is expected. But we're stretched here. So let's see if we can get a bounce. If gold bounces, watch this AUI. Okay, a couple of the glamour stocks, see if any pins are setting up. Apple could want to pin 375. Also looking weak. Amazon. Okay, Amazon got the hammer reversal on Wednesday. Tried to trade higher on Thursday, but came up lame. Can watch 180 here on the pin, maybe 175 if it sells off. Google. All right, 6.25 pin, 620 pin, maybe even 615. And if we get a sell-off on Friday, 615. Usually on option expiration days, I look more for high volume than volatility. But with the news, the constant news coming out of Europe and saber rattling over in Iran and all this other stuff, I mean, you can't rule it out. All right, but usually if it's non-news related or it's BS news related, right? It's not serious news. usually you can see some volatility early on option expiration day, but then it usually quiets down. All right, but if there is early volatility, but the norm is high volume and not so high volatility. All right, so that's really it. I'm sorry if I sound a little downtrodden today. I just have a headache, and that's why I try to do my videos early. But gonna hit the hay early and get an early start in the morning. So have a great trading day on Friday. Talk to everybody again over the weekend. Have a great weekend.